on Business Incorporated today. IATA AGM begins in Istanbul, Turkey. Non-oil private sector activity in Egypt contracts for the 30th straight month in May. And Ghana Treasury bill sales records about 15% oversubscription. Good afternoon. Good to have you on Business Incorporated. I'm Eni. John Mekwa will get straight into the market, where we start with Africa and its negative sentiment, unfortunately, for the continent, beginning with Nigeria at 0.17% down in the red there, still on to 55,760.07. South Africa JSE also in the same territory, 0.66% in the negative at 76,697.56. We know that South Africa normally would do a 78. So in spite of that, they are aiming towards that. Looking at other parts of Africa now, 0.57% in the red is what Egypt has at intraday, 17,370.73, while Kenya closed very positive on Friday, almost 1.5%. But it's not more than 105.10%. We move over to Middle East now and see what's going on there. It's a flip for Middle East. Most of the markets there are positive, but it's negative for Abu Dhabi at 0.59%, 9,375.76. Dubai is, however, very, very positive, more than 1%, 1.09% to be precise, 3,652.64. Look at other regions now. Saudi Arabia, almost 1% in the green, 0.71% at 11,300.09. Qatar also doing good at 0.36% in the green territory. Well, still doing the markets now. Let's see what's going on with Asia. And there we see that in Asian market Pacific, they're largely higher after United States President Joe Biden signed into law a debt ceiling bill that allowed the U.S. to avert defaulting on its financial obligations. Remember, that was a big deal last week. Well, the compromise debt ceiling bill passed the Senate by a 63-36 margin on Thursday evening, winning enough support from both parties to overcome Chamber's 60 vote threshold to avoid a filibuster. It moved through the House about 72%, passing 314 to 117. Now let's look at the numbers in Asia. Now that's the number there. We're starting from Australia, AX200, and it's just 1%, right there at the close of trade for Asia, 7,216.30. Nikkei, more than 2%, 2.22% at 32,217.43. Kospi also positive, 0.54. Hang Seng Index almost 1%. Where are the African markets? Shanghai also positive, 0.07%. Now let's go to London now. This morning I did speak with Juliana on the World Environment Day, which she confessed, just like in Nigeria, was not moving a whole lot of people. But Juliana, good afternoon. Good to talk to you again. We hear that report is indicating that UK has widened a lead as Europe's top market for financial services investments. I guess this is good news among some not so good news for you guys over there.
Good afternoon, Eni. I've got to tell you, this is great news for Prime Minister Rishi Sunak and, of course, the Chancellor Jeremy Hunt, who have made it their mission this year to try and turn round the UK economy and make London an investment destination of choice. And it appears to be just that, because according to the data that was released by EY earlier this morning, Britain is head and shoulders above its competitors when it comes to attracting foreign direct investment. So last year, we managed to attract over 98 investment projects, new investment projects. So this includes expansion or a firm deciding to set up their office there. And in second place was France with about 45. So amidst all the doom and gloom, Britain's financial services sector does appear to be blooming, which is good because there has been a lot of doom and gloom over the past couple of weeks. We had that pretty alarming outcry from Microsoft's chief executive in the UK, basically saying it was the darkest day that they'd ever had in 40 years when the Competition and Markets Authority in the UK stopped its acquisition or tried to prevent its acquisition for Activision Blizzard. Of course, we know that Brexit bureaucracy continues to cause heartache for millions of beleaguered small businesses in the UK. But despite all of that, Britain does still remain a top destination of choice for FDI investment. There are several reasons, one of them being the most common reason is the English language. Believe it or not, it does still attract investors far and above it would in mainland continental Europe. And I think the UK government need to now advance upon this. We know that data can be distorted, particularly when it comes to Africa and how data is distorted to try and make us look much weaker than we are. So I think a lot of observers are saying this is good news, but, hold your horses here. If we look at the data, this reflects sentiment and confidence in investors about this time last year. We know so much has changed since then. We've had 3 prime ministers in that time, nearly 4 chancellors. So even though it is great news, we need to be looking forward, not looking back in the rearview mirror. But of course, we'll take this one because it's positive.
Yeah, you need to take this. And I remember less than a month ago, Juliana, you had Governor Makinde of your state come over there for a business summit. I guess that's one of the participation that has increased that number for you guys over there. So we are part of that. Nigeria has added to that. But not so good news now. Data provider S&P Global reports that service sector cost inflation hit a 3-month high. So we're back to the cost of living and all the ingredients that make it difficult over there.
That's absolutely right. The S&P Global Index takes a very forensic look at the private sector activity in the UK, which hasn't been doing particularly well, especially manufacturing. I think we got the data for manufacturing just on Friday showing that, unfortunately, manufacturing output activity continues to fall in the UK. But we've had the services data in today. We know that services is a big one because it contributes almost 3/4 towards the UK's GDP. And it is pretty decent. It's come in at the month of May at 55.2, as you're quite rightly saying, Innie. It has dropped slightly from 55.8 where it was in April, but it's still above what economists factored in and priced in into the markets at 55.1. And of course, when we look at S&P Global's index, anything above 50, whether it declines or not, is still considered an expansion of the economy. Anything below that, of course, considers a contraction. If we look at May, it does appear as if British consumers have moved from buying goods to buying services. We had that all-important Coronation Day on Saturday, the 6th of May, where millions of tourists flocked into the UK capital. Lots of people were drinking Pimm's in the park, even though it was raining. They were celebrating, of course, the coronation of King Charles III. That boosted the economy slightly. And there are several other factors. It's getting quite warm, though it's quite chilly in the studio today. But when it is warm, people are out and about and they're spending, even though there is a cost of living crisis. And again, the Prime Minister will want to see these numbers reflected much higher in the coming weeks and months to come.
Yeah, wish him the best. But how are the markets looking?
Not bad. Of course, we got that announcement from Saudi Arabia that it would be, declining its oil production by about 1 million barrels per day from next month. That's pushed up all the oil majors in the UK at intraday. BP, Shell, they're all up. Brent crude, the benchmark for oil, is up too, as well as the West Texan Immediate. That's all up. The FTSE All Share is up 0.54% at intraday. The FTSE 100 up to at 0.53%, and the FTSE 250 the domestic market inning. That's up by 0.57%. In the currencies market, the British pound is currently trading down against the US dollar, down by 0.36%, down 2 against the euro by 0.30%, and down 2 against the Japanese yen by 0.27%. All of those FTSE figures going northwards has pushed down the British pound at intraday, Annie.
All right. Thank you so much, Juliana, for the market and a whole lot more. All right, let's move to the United States now, where U.S. equity futures were mixed on Monday after a broad-based rally that pushed the S&P 500 to its best week since March and its highest level since August. Futures tied to the Dow Jones. Look at the numbers right there. It's 0.10% in the green, 33,851, and S&P 500 also positive at 0.08. The Nasdaq is, however, in the red. It's been doing some rallies, so I guess it's time for profit taking. 0.09% at 14,561.75. Let's go to the global markets now. Global oil markets and prices rose following OPEC kingpin Saudi Arabia's decision to cut production by another 1 million barrels every day. That meeting was held over the weekend on Sunday, that's yesterday. OPEC Plus made no changes to its planned oil production cuts for the rest of the year. However, the world's top oil exporter, Saudi Arabia, announced further voluntary output cuts that will be implemented from next month, July. The kingdom's output will decline to 9 million barrels per day from around 10 million barrels in May. And both benchmarks were trading higher on Monday, although paired gains from earlier in the session. International benchmark Brent crude futures traded at $77.46 a barrel around midday, while U.S. West Texas Intermediate crude futures stood at $73.11, and that's over 1.9% higher. The metal space now, gold prices slipped on Monday as the dollar firmed after a strong U.S. payrolls report, overshadowing support from prospects that the Federal Reserve would pause its rate hikes this month. Spot gold was down 0.3% at $1,942.03 per ounce, hovering near its lowest level since May the 30th. U.S. gold futures shed 0.6% to $1,958.10. Gold prices dropped more than $1 on Friday after data showed U.S. non-farm payrolls rose 339,000 jobs last month, exceeding a 190,000 forecast by economists polled by some reporters. But the unemployment rate surged to a 7-month high of 3.7% from a 53-year low of 3.4% in April. Let's take a break now. When we come back, we do have loads of stories for you on the other side of Business Incorporated. Join us again. Welcome back to watching Business Incorporated here on Channels Television. Well, earlier today, we did bring you visuals and even had a guest in the studio telling us about the strike by Maritime Workers Union. They begin the strike today, asking for better welfare and working condition for ship workers. Well, we had in the studio earlier, Comrade Deputy Secretary General Organizing of Maritime Workers Union, and we took an excerpt from that conversation.
Because we have 4 branches of the union: the MPA, the dock worker, the seafarers, and the shipping. And the dock workers have NJIC that regulate the wages and remuneration of the workers. The same thing seafarer. The MPA, that is Salaries and Wages Commission, regulate their wages. But the shipping, all over time, they have been on this issue of plant level negotiation. But the union now said, no, let us have NJIC, National Joint Industrial Council, that we discuss, negotiate the remuneration, condition of service of the shipping workers. And the Shipping Association of Nigeria and Indigenous Shipping Company, they have been relying on this. And the union, we have been on this matter since 2018, before COVID-19. 2020 corresponded before me here We wrote to them, a committee was set up, and they have been dribbling us that they want to hear from NECA, they want to hear from this, they want to hear from Consumer Protection Agency, and so on and so forth. Shippers Council that regulate economic activities of tariff and so on and so forth called for a meeting. We met with them. They have been dribbling us. You will not believe that some shipping workers are casuals for almost 10 years. And the law says 3 months probation.
So obviously, if Nigeria is serious about improving its non-oil exports, then the maritime workers have to be taken into consideration, and they have to get back to work and not down tooling, which is what they are doing all around the country. Now we move to other issues. Now, recently, most Nigerian virtual card issuers deactivated their services, which has compounded pains with international payments in Nigeria and much of Africa. The root cause again was traced to MasterCard's displeasure with increasing frequency of chargebacks in Nigeria. Well, let's talk to Tunde Buremo. He's the Chief Executive Officer and co-founder of Cardify. He joins us virtually to talk about virtual card. Hi, Tunde, good afternoon. Thank you for joining us.
Oh, thank you.
It's good to have you join us virtually to talk about virtual cards. But why are virtual card issuers, why are they deactivating their services?
Yeah, well, to understand the reasons behind this, we have to take a look back. In July 2022, Union 54, one of the leading card issuing platforms at that time, shut down its operations. They faced challenges such as inflexibility, from their card scheme partners and lack of necessary technical solutions to address operational issues promptly. So this forced several card issuing platforms, who were also partners of Union 54, to follow suit. Now, recently, in May 2023, a lot of fintechs, including ourselves, had to shut the former card programs and commence issuance of new cards. There are two basic challenges card providers face generally. The first challenge is insufficient balance. So this is in two ways. One is when a user enters card detail on a platform they are purchasing from, when they are aware or even not aware that they don't have as much in the card balance of that card. So this also happens with recurring subscriptions. Another case is when a user makes a payment on a platform that validates such a transaction but does not process the deduction in card balance immediately. So what happens is within that short period of time, the user now tries to spend that same balance elsewhere, resulting in failed transactions, due to insufficient balance. The second and most prominent is cashback fraud, as you have mentioned, also known as first-party fraud.
So obviously, these are having some negative impact on fintechs, especially in the country, and probably threatening the growth of fintechs. Yeah.
So chargeback fraud, is also known as first-party fraud because it is perpetrated by the consumer in this case. So setting the record straight, chargeback fraud cost sellers over $20 billion in 2021. And data from MasterCard suggests that global chargeback volume may reach around $117 billion by 2023. So putting this in perspective, the report shows that the average chargeback will ultimately cost merchants around $3 for every $1 sale in revenue. So here is how this happens basically. A user spends his card at an e-commerce platform, for example, and gets delivered the product or service he purchased. But it doesn't end there. The user now contacts the issuing bank that he did not receive the item, or make a claim that he does not have knowledge of that purchase and does not know how such transaction was carried out from his account. So in such a case, the issuing bank is able to take back the money from the merchant whose services have been used to process the payment on that e-commerce platform. So merchants now get to claim their money back because that product or service was actually disbursed. And in a lot of cases, get to report the BIN, that's the bank identification number of the card provider, which could, lead to suspension of the ability, to issue cards. So because of this, card schemes normally give card providers a certain threshold not to pass. with respect to cashback. So it's around 1.5% of total transactions. And they also charge card providers between, let's say, $20 to $100 for each cashback, whether the claim is true or not. So you will agree with me that card providers pay a lot of hidden fees, hidden charges, that is actually difficult to charge end users, most especially when those end users, the end users in this part of the world are not familiar with those charges.
So that makes it really difficult. But very briefly now, any hope of this being resolved recently? Because I know recently it's been really difficult to do international payment, with cards. Any hope, briefly, please?
Yeah, so when talking about hope, we've got to talk about the solutions to this issue, and the approach that should be taken by fintechs is to know your customer, the KYC and AML measures, so that it can become easier for law enforcement to track down fraudulent activities. Also, the use of disposable virtual cards is being explored as a solution, because we realize that some users may unintentionally experience insufficient balance issues because they use these cards for specific goals. So at Cadify, we are also considering offering one-time disposable cards, that can be used for single purpose and discarded afterwards.
All right, thank you so much, Mr. Tunde Buremo, Chief Executive Officer and co-founder of Cadify.
It's a pleasure.
So issues in focus at the International Air Transport Association IATA annual general meeting, which is going on at Istanbul, Turkey, include the global outlook, which is better than expected, with the total industry net profit expected to reach $9.8 billion this year, off total $803 billion revenue for a 1.2% net profit margin. However, the outlook for Africa Airlines remains negative. In his industry address, IATA Director General Willie Walsh also drew attention to South Africa, where the country's main airports want to raise charges by 38%, and its air navigation service want to hike air transport control fees by 63%. Also of concern is the issue of blocked funds, and Nigeria tops that list, unfortunately, with more than $800 million still blocked, belonging to the foreign airlines. And then we can tell you that we've been talking about Brics. We talked about Brics last week, that the Brics Foreign Ministers meeting has come to an end in Cape Town, with 8 new members joining the body's new development bank. These include the United Arab Emirates, Bangladesh, and Uruguay. South Africa's Minister of International Relations and Cooperation, who addressed the media, says that the Brics new development bank is playing a key role in advancing the developmental agenda of developing nations. Mr. Pando was speaking at the just concluded Brics meeting of foreign ministers in Cape Town.
The new Brics Development Bank has grown its membership from 5 to 8 members, and a 9 is set to join soon. Host Minister Naledi Pandor of South Africa said the bank has recorded impressive progress and that most of the loans secured through the bank had been for infrastructure development. She also announced that members are happy about the bank's AA+, with a stable outlook rating by Standard & Poor's.
In our view, the bank has recorded some really quite impressive progress. We're particularly thrilled that it's maintained its very, very excellent financial rating. It also has played a role, which was our aspiration when we created it, in providing support for development programs in our own countries, but in the member countries as well. We had hoped we created a different kind of development financial institution that really would be committed to addressing matters of socioeconomic development.
BRICS countries accounts for over 40% of the world's population, 20% of the world trade, and 25% of the global GDP. The bloc is attracting a lot more interest. However, with Russia-Ukraine conflict, economists predict Russia's economy will contract between 8 and 16% this year, wiping out all the gains of decades of economic growth.
That was Channels Television South Africa correspondent Innocent Semosa there, bringing us up to date as that Brics ministers' meeting ends in Cape Town. Let's move to Ghana now, where that country still enjoys some benefits from that $3 billion bailout fund from the IMF. The Ghanaian government has experienced a significant increase in the subscription of treasury bills, with about 15% of the subscription of the targeted amount of 2.08 billion CDs. However, this was mainly due to reduction in the targeted amount itself. The Bank of Ghana reported that the government received approximately 2.4 billion CDs from the auction of the T-bills. In Egypt, the non-oil private sector has experienced a 30th consecutive month of contraction in May, and this is because of persistent high inflation and weak demand, as indicated by the S&P Global Egypt Purchasing Manager PMI, that's the Purchasing Managers Index. Although the PMI increased slightly from 47.3 in April to 47.8 in May, it remains below the threshold of 50 that signifies growth in activity. The decline in business activity is attributed to companies reducing output in line with low sales volumes. However, the rate of decline was the slowest in almost a year and a half, aided by near stabilization in the manufacturing and services sectors. Input prices and purchase prices both rose, with the overall input prices sub-index increasing to 59 and the purchase prices sub-index rising to 60.1. That's it on Business Incorporated for today. Thank you so much for being a part of it. I'm Ini John Mekwa. Enjoy the rest of the day.